Hi, this is Ryan with MortgagePhilosopher.com, and in this video we're going to answer the question, what is an earnest money deposit? So whenever you're purchasing a property, the seller who is selling the property is usually going to receive multiple offers from different buyers. Now once the seller has accepted one of the offers, the buyer will have to wire over what's called an earnest money deposit to escrow to show the seller that they're serious about buying it, and also just to get the transaction started. Towards the end of the transaction, those earnest money deposit funds get applied towards the buyer's down payment. And typically the earnest money deposit will be between 1 and 2% of whatever the purchase price is. However, depending upon the market, it can sometimes even be as high as 3%. So for example, if you were buying a $300,000 property and the seller wanted you to provide a 2% earnest money deposit, then you would have to wire over $6,000, which is 2% of $300,000, to escrow to get the transaction started. Now, if for some reason the transaction falls through and your deal doesn't close, then usually you'll receive that earnest money deposit back from the escrow that you wired it to. However, if you pulled out of the transaction for a reason that wasn't allowed on the purchase contract, then there is the possibility that the seller will be able to keep your earnest money deposit. With all that said, make sure you look at your purchase contract really carefully with your realtor to make sure that you're satisfied with how it disposes of your earnest money deposit in the event that you come into a dispute with the seller. So I hope you found this video helpful. If you liked it, then feel free to hit the like button below. And if you want to see more videos like this, then feel free to hit the subscribe button below. As for now, I'm Ryan from MortgagePhilosopher.com.